Good evening. Good evening.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening.
Good evening. Good morning. Yeah, can you enable screen sharing? Can you enable screen sharing? I can't share screen. Okay. Can we start? Can you hear me?
Can hear, sir. You can start.
Okay. Okay. Right. So let's continue now local hospital and annual report. Last week we discussed their group structure and the difference between subsidiary associates and all. And this is their group structure. Can you see the Excel sheet? Can you see the Excel sheet?
Can see,
Yes, sir. Yeah.
Okay. Okay. So the Navaloka Hospital PLC. So this is the parent. The parent company, and all these are subsidiary companies. New Navaloka Hospital Private Limited, New Navaloka Medical Center Private Limited, and Navaloka Medicare Private Limited, and Navaloka Green Cross Laboratories Private Limited. Right. So there are 4 subsidiary companies and the parent company Navaloka Hospital PLC. Right. So in this annual report, when they refer company, they refer Navaloka Hospital PLC, right? So company is Navaloka Hospital PLC. When they refer group, right? When they refer group, they refer Navaloka Hospital PLC plus all these 4 subsidiary companies, right? So is it clear in the annual report? You can see company column and group column, right? And when you refer company column, you are referring Navaloka Hospital PLC company. PLC company, right? Yeah. Hold on for a second. Okay, sorry. So when we refer annual report, company means Navaloka Hospital PLC, individual company, right? So without before amalgamating Navaloka Hospital Private Limited, Medical Center, and all these subsidiaries. So individual company is Hospital PLC, and when they refer group, company number plus all 4 subsidiary companies, right? And also remember, all these subsidiary companies are 100% owned subsidiaries. So this is 100% owned subsidiary, and this is also 100% owned subsidiary company, and now local Medicare also 100% owned, and this is also 100% owned subsidiary company, right? And let's say the turnover of this company is 100, and 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 Hospital PLC, their turnover, let's say 200, right? What's the turnover of the group, right? I'm going to repeat. Let's assume that New Navaloka Hospital Private Limited this is their sales or income, right? This is their income. Let's assume, right? 100, 100, 100 for subsidiaries, and the parent company 200. What's the group sales number? What's the group sales figure? New Navaloka Hospital 100, and so when you consolidate, right? So if you want to calculate the group number, group income, right? You need to add all these numbers. Group income, right? So you need to add this company plus this company plus this company plus the group, the hospital revenue. So 600, right? Now I am going to change the holding percentage. Let's say the holding percentage of this company is 80%. What's the revenue number that we need to take when you do the consolidation? Can you hear me?
Can hear, sir. Can hear.
Yeah. So let's say the first company, subsidiary company, holding percentage is not 100%. Now let's say 80%. What's the revenue number that we are going to take for consolidation?
80%.
100.
100. Let's say New Navaloka Hospital owns only 80% of New Navaloka Hospital PLC, New Navaloka Hospital Private Limited, right? New Navaloka Hospital Private Limited, the first company, their shareholding is not 100%, 80%. So when you do the consolidation, do we need to take 80% of New Navaloka Hospital Private Limited's income, or do we need to take 100%?
80%.
Okay. Yeah. So when you do consolidation, right? When you do consolidation, we take 100%, right? Even if the shareholding is 51%, we take the total income of the subsidiary company. And why we do this exercise, right? When you consolidate, the group income is the amalgamated number of individual companies' income plus the parent company income, right? We don't take 80%, we take 100%, right? As Chula said, right? Our holding is 80%, therefore technically we need to take 80% of the sales. 80% of the sales. Yes. And even expenses, technically we need to take 80% of expenses of this company for the consolidation. But we take 100% and do the consolidation. And when we go through the consolidated financial statements, you can see individual company numbers added to the parent company number and calculate the group number. But end of the income statement, you identify profit attributable to parent, the shareholders of the parent company. So what's the profit attributable to the parent company and the non-controlling shareholders, minority shareholders, right? Is it clear? Rather than taking relevant percentages from subsidiary income and expenses, what we do is we take the total number, and at the end of the calculation, let's say we calculate the group profit, and from that we identify profit attributable to the parent company and the non-controlling shareholders or the minority shareholders, right? Is it clear? Is it clear? Yeah, let's go through the income statement, then you can understand, right? Any clarification you need? So after doing consolidation, if the, let's say the group profit is 200, so from that we calculate the profit attributable to the parent company. So by applying percentages, we can calculate the profit of the parent company, right? And the balance is non-controlling shareholders. Those days we call the minority shareholders, right? Okay. So this is the group structure. Let's go through the annual report, right? Can you see the annual report?
Can see, sir.
Okay, thank you. And so this is the annual report, right? So, and let's yeah, about the report. So we need to go through, and can you read this?
Can read, sir, yes.
Yeah.
Yeah.
Scope and the boundary, right? The report covers the activities of the group Navaloka Hospital PLC. They say the report covers the activities of the group Navaloka Hospital PLC and its 4 subsidiary companies. It's here. I'm reading this part, right? So they say the report covers the activities of the group Navaloka Hospital PLC, right? So this is Navaloka Hospital PLC group, right? And the subsidiary companies mentioned here, and the period is from 1st April 2019 to 2020, right? An annual reporting cycle has been adopted. The most recent report for the financial year ended 31st 2019 is available on our website, right? And so then the report focuses on aspects deemed material to the group operations and to our stakeholders. Can you remember the materiality concept we discussed? So one accounting concept called materiality. All material transactions should be recorded in preparing financial statements. When you prepare financial statements, you can't eliminate material transactions, right? You can't omit material transactions. So they say the report focuses on aspects deemed material to group's operations and our key stakeholders. All financial and non-financial information presented here represent consolidated figures of the company and its subsidiaries unless otherwise stated. So therefore, from this annual report, you can see the group numbers, right? And also they say there are no significant changes in the scope and aspect of boundaries, right? As there. Then reporting structure. Can you see this?
Can see, sir, yes, can.
Yeah, reporting structure. Yeah. So we have structured the report to provide an overview of how we nurtured our capital to deliver values to our stakeholders, right? Please try to understand, right? Please try to understand all these parts. It's very important, right? So most of the readers, we don't read these parts. That's why I'm going through this. So we have structured the reports to provide an overview of how we nurtured our capital to deliver value to stakeholders. We aim to continually improve the quality of our reporting, and this year report include the following features to enhance clarity and readability, right? So they include, first time, increased strategic orientation in reporting, right? So as I told you, in an annual report, you can understand the strategy adopted by the organization, right? So this is not finance, this is not accounting, right? So this is not financial accounting, right? In addition to financial accounting, in the annual reports, you can see the strategy of the organization, right? And also they say careful consideration of relevant and material information, right? So all relevant and material information also they disclose in this report, right? And thereafter, quality assurance. What is this? The group has obtained an independent opinion on the financial statement from its external auditors, KPMG, and their report is set out on page 123 and 127, right? So these financial statements have been audited and by KPMG, right? So now we can get an overall idea about the annual report. Their period is 31st March, and this annual report is 31st March 2020, and their financial year beginning is 1st April 2019, right? Okay, let's go down further. Then reporting standards. Can you see here? Reporting standards, right? So those days when we prepare financial statement, we use only accounting standards, right? We use only accounting standards. Now, even the annual report preparation process is evolving, and therefore, in addition to financial reporting, we report narratives, narrative reporting, and corporate governance, right? So now there are three parts. The first part is financial reporting, the narrative reporting, and corporate governance, right? Corporate governance. For financial reporting, Sri Lanka financial reporting standards are used. In other words, we call it the SLFRS, or International Financial Reporting Standards. So they use International Financial Reporting Standards, so Sri Lanka Financial Reporting Standards, right? And also Companies Act number 7 of 2007, right? So being a company registered under the Companies Act, there are a mandatory requirement that you need to include, the mandatory requirement that you need to comply with when you prepare annual reports or financial statements. So Companies Act also one guideline, right? Then Sri Lanka Accounting and Auditing Standard Act. In addition to the standard, Sri Lanka Accounting and Auditing Standard Act also applicable to this organization, right? I have a question. Sri Lanka Accounting and Auditing Standard Act, is it applicable to all the companies in Sri Lanka? Is it applicable to all the companies in Sri Lanka?
Yes.
Right. So this is an act. This is an act. Sri Lanka Accounting and Auditing Standard Act. Right. Is it applicable to all the companies? What are the companies coming under the purview of this act? It's not mandatory to all companies. All the companies, right? And but most of the companies where you work, or big companies, this standard is applicable, right? And all the listed companies should apply Sri Lanka Accounting and Auditing Standard, follow Accounting and Auditing Standard Act. And all the banks, all insurance companies, all asset management companies, right? All stock brokers, right? all these companies, they need to comply with Accounting and Auditing Standard Act, right? So in this act, they say specified business undertaking, right? Specified business undertaking. So the companies need to apply this, yes, SPEs. So specified business undertakings need to comply with this requirement, right? And I can't remember the exact threshold. If the revenue is more than, let's say, 1 billion, right? All the companies need to comply with this guideline, right? Threshold I can't remember. Even the profit number, if the profit is more than this, so these companies also, whether this is a private company or a public company, or irrespective of whether it's listed, so they need to comply with this act, right? And even for the asset base, there is a criteria. If their total asset base is more than 2 billion or 1 billion, and they also need to comply with the Sri Lanka Accounting and Auditing Standard Act, right? So this company being a listed company and the turnover is big and the asset base is big, therefore Sri Lanka Accounting and Auditing Standard Act is applicable to this company, right? Okay, for financial reporting, three standards: Sri Lanka Financial Reporting Standards, Companies Act, and Sri Lanka Accounting and Auditing Standard Act, right? Then narrative reporting, right? So in addition, sorry?
Yeah, sir, Companies Act, what is the specific implementation here?
Sorry?
On the Companies Act, Act number
Yes.
7, 2007, what is the specific relevance with regard to this? Can you elaborate on that?
Yeah, yes. So all the companies need to comply with Companies Act requirements, right? And even some of the deadlines, right? So you need to file annual returns and you need to prepare audited financial statements. Yeah, the deadlines given in the Companies Act, right? So therefore, when they prepare financial statements, they need to meet the deadlines given in the Companies Act, right? And the second thing is some of the disclosure requirements, right? Some of the disclosure requirements, and which we are going to discuss in detail a little later. And let's say we call the timing amounts of transactions, right? Timing and amount of transactions are decided by the Companies Act. Some of the transactions, right? And stated capital disclosure requirements, most of the disclosure requirements coming from the Companies Act, right? So number of shares issued and the value of the stated capital, all you disclose to comply with this Companies Act requirement, right? And there are a number of other the factors which we are going to discuss. Therefore, the Companies Act also guides the preparation of financial statements, right? And the one thing is stated capital, and also when you declare dividends, and even the amount decided by as per the Companies Act, the maximum amount that you can pay as dividend is regulated under the Companies Act, right? And not only that, even if the company is making losses, and if the stated capital is or the total equity is less than 50% of stated capital, then as per the Companies Act, we say it's a serious loss of capital situation. And then that also you need to disclose to the shareholders, right? All these things, disclosure requirements are from the Companies Act, right? So we are going to discuss all these things in detail. And so Companies Act, they need to comply with Companies Act requirement also in financial reporting. The second part is narrative reporting. So here what they use is integrated reporting framework of the International Integrated Reporting Council, IIRC, right? So they also have the reporting framework, IIRC, and the company follow this IIRC framework, right? In disclosing non-financial information, right? And in this report, annual report, I think number of pages more than 200 or 200, And the financial report, I think half of that, the balance half is non-financial narrative reporting. So therefore, they follow IIRC framework in disclosing narratives, right? So another standard. And for corporate governance, last part, right? So in the annual report, you can see corporate governance disclosures, and the standards that they use is continued listing requirements of the Colombo Stock Exchange, right? So this is a listed company, therefore they need to comply with listing requirements. And so as a direction or SEC direction, they need to comply with these listing rules, right? Corporate governance. So for example, the number of non-executive directors that you have to have on your board, and the independent directors that you have to have, and the composition of audit committees determined by the listing rule, and the chairmans and CEOs roles are defined and segregated in the corporate governance, these stock exchange directions. And so all these things are corporate governance requirements are SEC requirements. So therefore, they need to comply with listing requirements of the Colombo Stock Exchange, the first standard. Then second thing is code of best practice on corporate governance issued jointly by CA Sri Lanka and SEC. So this part, right? So there's a code of best practice on corporate governance issued by CA Sri Lanka and SEC. So they issued in 2013, and most of the companies follow this guideline, right? And so this is also part of the standard that they adopted in reporting corporate governance. So there are three types of reporting: financial reporting, narrative reporting, and corporate governance. And these are the standards that they use. And can you read this part? Statement of the directors, statement of the board. The board acknowledged its responsibility to ensure the integrity of the annual report, annual integrated report, and list of and is of the opinion that the report address all material issues that it believes that has a bearing on group's capacity to create value over the short, medium, and long term. The report was unanimously approved by the board and is signed on behalf of the board, right? They say they take the responsibility for the preparation of financial statements, right? So they specifically mention the directors are responsible for the preparation of financial statements, right? So this is about the report, right? Okay. Then the next page is who we are, right? And our group, right? Again, they mention about the group, our group, the Navaloka Hospital, and so a bit about the history. And so these are subsidiary companies. As I told you earlier, all these companies are 100% owned subsidiary companies of Navaloka Hospital PLC, right? And then what about other companies in Navaloka Group, right? In Sri Lanka, when we say Navaloka Group, there are a number of other companies. Navaloka Construction, Piling, then Polisax, then Kola, Interior, whatever, there are a number of other companies, right? So are they part of Navaloka Hospital Group, PLC Group?
No.
No. So they are not subsidiary companies or associate companies, right? All the companies that I mentioned, and there are a number of other companies managed by the major shareholders of this company, and those are not part of this group, Navaloka Hospital PLC Group, right? Those are related companies. The major shareholders of this company are the major shareholders of those companies, but no, there is no direct link between Navaloka Hospital PLC and the related companies, right? Therefore, Therefore, all these transactions, all these the transactions that the Navalok hospital is going to have with all these related companies, you need to disclose under related parties. Right? It's a mandatory requirement. You need to disclose all related party transactions. Right? Okay. And purpose, vision, mission, everything is given.
They are having these subsidiary companies without having all together for management to have efficient management.
Sorry?
Now, instead of having their subsidiaries, the three companies, they can
Okay.
have it all and as one company because they have 100% stake of all.
Okay.
Why are they having it as subsidiary? What is the advantage when you have?
Okay. It's a good question. I need the answer from the other students, right? So why they set up different subsidiary companies rather than operating all these companies under one company, right? So this is applicable to all, like let's say John Keys Group, right? Hemas Group, CT Holdings or Cargill's Group, right? Valuable Group, Haley's Group is part of Valuable, and so why you set up different companies, right?
Because each subsidiary can focus on a particular area of business.
The subsidiaries can focus on a particular area of business. Yes, right. It's like having a portfolio of ministers, right? So you can appoint SBU heads, right? So all these companies, so sometimes even one or two companies together, they put it and they say one SBU, right? So I can remember long ago, the Hemas company was a family managed company, family business, and I think in before to close to 2000, and they did a restructuring, and all the companies under Hemas family, and they identified and group as SBUs, right? And strategic business units, right? And creating clusters, right? So different the companies that they form, put it under different clusters. Even if you take John Keys, they have a property segment, and then leisure segment, and then the banking or financial services, insurance, right? The number of sectors SBUs are there. And so why you set up number of companies? The one reason is, if you try to manage all these things together, right, you lose the focus, right? There should be a dedicated team to manage the different businesses. So as somebody said, the one reason is, and these industries are different, and all they operate in different industries. But when it comes to even Navalok, the group, right? So one company is a pharmaceutical company, right? I think all others are hospital, right? Hospitals, but the risk and the growth potential in all these different hospitals are different, right? Try to understand this. The growth potential and the risk is different in all these organizations, right? Though they operate in the same industry, right? They operate as hospitals. The pharmaceuticals, of course, you can identify as a separate business, and it's different to hospital, but there is a link, and it's part of a hospital, but you can identify. But what about Negombo Navalok Hospital? And how do you differentiate it from Colombo Navalok Hospital? And I think there's another hospital somewhere in Golo, Mathura. So they have a hospital there, right? How do you differentiate? And also they have small hospitals in Kiribati, Goda, and other suburb areas, right? So why you set up different companies to manage all these things? The one reason is the growth potential and the risk is different. And also the customer base that they cater from different hospitals are different, right? If you take Kiribati, the center, it's a small hospital and only to the patients in that area, right? So therefore, the one thing is you can, when you set up individual companies to manage different businesses, then their operating environment are different and there should be a dedicated team to see that. And that's why you need to set up individual companies. Otherwise, you can form one company and carry out all the businesses, right? Any other views on that? Why? Sorry.
So even if one company is making loss or something like that, actually the reputational wise also you can handle it separately, right?
Sorry.
Say if one company fails, like if they make a loss or whatever, so then the impact to the other companies, you can handle it separately, right?
Yes. So that's also one of the reasons. Yes, right. If there's issue in one company, and rather than putting all the eggs in one basket, so you can mitigate the risk also. Yes, one of the reasons, right? So as I told you, the risk, growth potential, and the cash flows are different. That's why you need to manage separately, right? Yeah. Okay.
So for the tax purpose, can we set off subsidiary losses against the group? Is it possible?
Those days, yes, but nowadays these related party transactions and intercompany transactions are regulated by the Inland Revenue Department, right?
That is the transfer price, right? When you transfer
yeah, it's called transfer pricing, right?
Yes, sir.
So all the transaction with the subsidiary companies and related companies should be at arm's length. You can't do any preferential treatment for a subsidiary company or associate company, right?
Okay.
So what is meant by preferential treatment? And let's say you sell pharmaceuticals to a subsidiary company. The parent company, they have pharmaceuticals and they sell pharmaceuticals to a subsidiary company, but they can't underprice and sell pharmaceuticals to them, or overprice and pharmaceutical that company, right? So it's a violation of Inland Revenue regulations, and also it's a violation of related party transaction, the guidelines issued by SEC, and therefore you can't have preferential treatment for subsidiaries and associates. Therefore, with the new transfer pricing regulations, now it's very difficult to manipulate your taxes by using subsidiaries and associates. So to a certain extent, that still the room is there. So when you go through even this hospital's annual report, and we went through 2015 annual report during last 3-4 years, and then we realized that how they manage even taxes, how they transfer profit from the parent company to subsidiary companies, right? By using intercompany transactions, right? Now less chance, but still you can do when you have subsidiaries and associates, right?
Okay, sir.
Yeah. So why we say this is there are intercompany transactions, right? So how do you identify intercompany transactions? Is there a process to identify intercompany transactions? Even for the regulator to review the intercompany transaction, you need to have a process. Otherwise, the regulator can't come and check individual transactions, right? So internally, you need to have a process to capture all related party transactions, right? It's mandatory as per SEC requirements. But unless you disclose, regulator can't identify. They don't come and do audits, right? They can't check all the transactions. Therefore, there should be a process. And if you do, that's what I say, even if the regulation is there, still there is a room for manipulation, and they can use it for to minimize taxes, right? Let's say one subsidiary company is making losses, right? So the parent company can transfer part of the profits to the subsidiary company, right? So then you can minimize the tax payable by the parent company. So as a group, you minimize the taxes. But for tax regulations, individual companies need to calculate taxes separately, and you don't calculate taxes for the groups, right? We need to calculate taxes for individual companies as they are separate legal entities, right? Okay, okay, right. So let's go through this. It's a good question. You raised why you set up number of companies. Yeah, one thing is those days for tax purpose. Yes. Right. Then who we are, right? So the in 2015 annual report, we couldn't see this kind of highlights, right? So you can get the overall picture of the organization from this page, right? So they say 600 plus consultants and 14,600 surgeries and 26,400 patient admissions and 483,000 channeling appointments and 2,300 employees and 400 plus beds and 2,500 plus tests and diagnostic capabilities and 525 nursing staff, right? So overall organization, now you can understand from this page the size of the organization, right? So how do you measure size of the organization, size of a hospital? How do you measure size of a hospital?
Beds. Amount of beds.
Yeah, number of beds, yes, right, number of beds. How do you measure size of a hotel?
Again, rooms.
Again, number of rooms, yes, number of rooms. So we use different criteria to assess the size of the organization. If it's a bank, how do you measure the size of the bank? Size
By
of the
the
bank.
asset
Sorry?
base.
Client base.
Client base, yes.
Number
Asset
of
base.
branches.
Number of branches.
Asset base.
Yeah, the mainly asset base. The size of the balance sheet, asset base. So whether the balance sheet is 1 billion, 1 trillion, or the size of the balance sheet, right? So you can assess their capacity by looking at the balance sheet, yes, right? And not only asset base, together with that, we can take the deposit base, lending base, and capital adequacy, right? All to assess the size of the organization. But in the case of a hospital, remember, the main criteria that we use to measure size of the organization is number of beds, right? So they say highest number of beds in a single private facility. So they say the highest number of beds in a single private facility, right? But as I can remember, Apollo Hospital, Lanka Hospital, their number of bed 500 room, 500, the 500 as I can vaguely remember is 500, right? So anybody from Lanka Hospital, right? So as I can remember 500, right? But they say highest number of beds in a single private facility, right? One location, so 400 beds. And island-wide the network, lab network. So they have 2 hospitals, corporate 10 corporate medical centers, right? And 2 regional labs, 5 mini labs, and 800 plus collection centers, and 12 owned collection centers, and 5 in-house pharmacies, right? So the facilities they have, and the geographical presence also given here, right? Western province, 1 regional lab, 2 mini labs, and what is COCO? Collection centers. Yeah, I don't know. So did this? Yeah, own collection centers. COCO, own collection centers, 9 Colombo and Southern Province 3, and this is how they operate, right? You can get the overall picture of the organization from one page, and this is how you present information all these are non-financial, right? All these are non-financial, right? So those days, if you want to get all these details, you need to talk to the management or you need to have inside information, but you can see all these details in the annual report, right? Okay, then let's go through. Yeah, facilities I'm not going to go through. So the facilities that they have, right? Okay, let's go to page number 12, right? Page number 12. So that is performance highlight. Oh, so the printed number is 12. Here PDF number is 14, I guess. Yeah. So this is the performance highlight. Can you see this? Can you see this page?
Can see,
Yeah.
can see.
Okay, performance highlights, right? So before going through the financial statement, as a reader, you need to get the overall picture of the organization. That's why they are providing a lot of information, right? About the subsidiary companies and the number of subsidiaries, whether they are 100% owned, and the group include how many companies and their operations, volumes, everything is given before going through financial statements. So you can get a better understanding of financial statements if you know all these details. So that's why you present financial highlights also, right? Financial highlights also. And let's go through this report. And so when you refer financial highlights, is this for Navalapa Hospital PLC? The numbers given here, what is this?
Hospitals PS.
Hospital PLC.
For the whole group.
Yes, this is for the group. This is for the group, right? So the financial highlights, this is for the group, not for the individual company. And the revenue 8.5 billion, right? Revenue 8.5 billion. And so I want to copy this to Excel sheet. And so I'm going to type this and I will show you a little later, right? Revenue, what's the value in 2020? What's the value?
8,556.
Yeah, so this is in millions. Therefore, what's the number?
8.5 billion.
8.5 billion, right? So the revenue number is 8.5 billion. I'm typing this and I'll share the Excel sheet after that. 8.5 billion. And the last year, 2019 revenue? 2019 revenue?
8,134.
Yes, right? 8,000, again the same number, 8.5 billion, no significant difference. 8.5 billion, right? 2019, 8.5 billion, and 2020 also 8.5 billion, right? 8.5 billion. And no increase, they maintain the same revenue, right? And before going through financial highlights, and have you all been to Navalapa Hospital? I'm sure, right?
Yes.
Most of you, yes. And so you all have seen, right? Most of the time they are channeling operation. You can't find, you know, all the time the hospital is crowded, right? Hospital is crowded, and even if you want to book a room, it's difficult to find, get a room. And most of the time, all the rooms are occupied, and therefore the volume wise, and when you see, right, when you visit there physically, right, you can see how they operate, right? And so as a patient, we go there and so then that we can see how they operate, right? And to get a room, it's difficult. And even for channeling areas, you can't find a place to sit even. So a lot of people visit the hospital, and most of the time occupied, right, and crowded. Therefore, what's your gut feeling? Is this a profitable business or a loss-making business? Gut feeling, without going through the report.
Profitable.
Huh?
Profitable.
Yes, right? So without looking at the annual report, without going through financial statements, and if you analyze, if you physically go there and if you assess, you think that this is a profitable business, right? This should be a profitable business. Let's see, right? And so what their operating profit? Operating profit. So here, second item. Can you see this? You want me to enlarge? Operating profit 1.2 billion. Yeah, so operating profit number is this 1.2 billion, right? I'm going to type this. Operating profit 1.2 billion, right?
180.
Yes. 1.2 billion, 1.18, let's say 1.2 billion. And last year, this year 1.2 billion. Yeah, 802 million. Yeah, this year 1,180 million. Last year 802 million, right? So 0.8 billion, if it is in billion, 0.8 billions, 0.8 billion, right? And yeah, so I'm going to share. Yeah, let's go through it again. Then it's easy otherwise. Then profit before tax. How much? This
Loss. 166 million loss.
Yeah. So 2020, 166 million loss, right? So I'm typing this profit before tax, right? 166 million loss is minus, right? We thought company is profit making, but when we see the financial statements, you see a different picture. And 2018-19, 388 million loss, right? A loss of 388 million. Right? I'm typing this. I want to share all this, right? And profit after tax. Profit after tax. How much?
15.9 plus.
Yeah. So please read this carefully. Revenue 8.5 billion. First number, this is 8.5 billion, and operating point 1.1 billion, and profit before tax, this is a loss before tax 166 million, and profit after tax again, is this a profit or a loss?
Profit.
This is a profit, 15.9 million profit, right? So profit after tax 15.9 million profit. And last year
Loss of 587.
Yeah, a loss of 587 million, right? Last year 587 million loss, right? A loss, right? Now I am going to share this summary of income statement. I need your interactions, right? So let me share the Excel sheet. Can you see this?
Not yet, sir. Now, yes.
Okay. So this is yeah. So this is the income statement summary, right? And revenue 8.5 billion, and
Priyanka, just a quick question. Is in 2020, has there been a tax refund? Otherwise, how is it that the NPBT is a negative figure and NPAT is positive?
yes, right, and yes, right. Go through the please read this and understand, right? Try to understand the overall picture, right? Revenue 8.5 billion, and 2020 and 2019 also 8.5 billion, right? So no growth. Operating profit
Has increased.
increased, right? Operating profit increase, right? So is it a usual relationship? The revenue and profits, what kind of the relationship you expect? Positive or negative?
Positive relationship.
Yes. So higher the revenue, higher the profits, right? So if you increase revenue, you can increase your profits. That's the usual relationship, normal relationship. But here you can see a difference, right? Revenue, no growth, but operating profit, there's an increase. What's the percentage increase? If you calculate percentage, what's the increase?
49%.
49% increase, right? So 49% increase. You maintain the same revenue, but you increase profit this year. Is it possible or impossible?
Possible if you increase the efficiency of your operations.
Yes. So this is possible, and as you said, you need to increase the efficiency of the operations, right? Increase the efficiency of the operations, and yes, it's possible. You need to increase the efficiency of the operations. So how do you increase the efficiency of operations?
By trying
The
to reduce
cost.
your cost.
Yeah. So you can reduce your cost. Yes.
Optimize your resources.
Optimize your resources. Yes.
Or generate more output from the same resources employed.
Yeah, the generate more output from the same resources. Yes. Yes. And also, before going through detailed financial statements, can you understand the business environment in 2019 and 2020? Right? 2020 was the period.
COVID period.
Yeah, 2020 was the
January
starting.
to December.
Yeah, not January, December. From 1st April 2019 to
First
1st
March.
April 2019 to 31st March 2020. Right? Their financial year ended 31st March. Therefore, starting point, the financial year beginning is 1st April 2019 and end is 31st March 2020. Right? Any exceptional event taken place during this period?
COVID, the latter part.
Sorry?
Latter part.
Latter part, COVID.
Yes. The COVID pandemic. Yes. And impacted Sri Lanka in which period?
March
March
2020. March.
2020.
Yes, March 2020. When we locked down the country?
15th of March, I think.
15th of March. So the impact to this year 2020, how many days, how many months?
15 days.
15 days, 2 weeks.
Yes. The impact of COVID-19 pandemic on the performance of 2020, right? Not for the whole year, but only for 15
Days.
days, 15 days. Any other major event took place in 2020? Or 2019 or whatever?
Attacked by Saharan and the crowd.
Yes, yes. Easter Sunday attack. Yes, Easter Sunday attack. Right. And was there an impact of Easter Sunday attack on hospitals?
Yes.
Yes. Right. So I'm typing all these things. Right. So we need to understand the business environment. Otherwise, we can't analyze financial statements. Right. So how they made profits and why they couldn't increase their revenue and how they improve profitability. You need to understand the business environment, right, in that year. So one factor is COVID, but the impact is only for 15 days in this year, right? We can expect a bigger impact in next year, 2021, right? The impact of the COVID lockdown affected the operation only for 15 days, and rest of the year no impact of COVID to them. For 2020, yes. The second one is the Sunday attack. And when this attack took place?
21st of April or the 22nd.
Okay. April, which year?
19.
2019.
19, yeah.
Yeah. So impact to this financial year, 2020, is there an impact to this financial year?
Yes, yes.
Yes, yes. So at the beginning of this financial year, 2020, 1st April is the financial year beginning. And therefore, if there is an impact from Easter Sunday attack, and that also we can consider, right? That also we can consider. We need to understand whether there is an impact to hospitals, right? Okay. Any other major events, major changes in the environment they operate? Any other
election and the government changes, right? It might be.
Okay, election. Okay, let's say election. Other than that? The impact in their business, the variables, the impact in their business. Any other thing? I don't know the impact of election on their performance. Yeah.
Government farm drugs price ceiling.
Exactly. That's what I expected from you. The price ceiling, right?
Ceiling.
So
Yes.
the government introduced a price control. Or impose a ceiling. So pharmaceutical prices controlled by the government, right? And yes, this is a major incident or major impact. So there was a major impact on most of the pharmaceutical companies and hospitals. Yes, right? Yes. Any other factor? And can you remember what is this? So most of the pharmaceuticals, government impose a price ceiling, right? If you take paracetamol, and Glaxo was selling a paracetamol for 5 rupees, right? I can't remember. Before this price control, price ceiling?
3 rupees. 3 rupees.
3 rupees.
Yeah.
Yeah. Was the maximum price imposed by the government? 150?
Yes.
Or 2 rupees? 1 rupee. 1 rupee, yes.
1 rupee. 1 rupee.
1 rupee, yeah. So it's a 200% price reduction for Glaxo. Right? The Panadol price of a paracetamol or Panadol. So at that time, 3 rupees. And government imposed a price ceiling saying that the maximum price that you can sell a paracetamol is 1 rupee. Right? So the companies like Glaxo, they had to reduce their price from 3 rupees to 2 rupees. Right? You can imagine the impact of this price control or price ceiling on performance of Glaxo. Right? I think one of the biggest brand of Glaxo is paracetamol, right? This Panadol, right? Yeah, I think one of the
Exactly.
biggest. Yes, yeah, one of the biggest brand. Why I say the biggest brand? You go to everywhere, anywhere in Sri Lanka, you can buy a paracetamol or Panadol, right? And the market reach is there, right? And cover the entire country, and therefore there's a huge impact of consider only this one drug, but they control they impose a price ceiling. So therefore there could be a negative impact on the overall performance of the hospital. They are selling pharmaceuticals, and as part of that they have a pharmaceutical operations as well, but in addition to, even for hospital operations, they need to buy pharmaceuticals and use pharmaceuticals in the industry. So if there's a negative impact to the overall industry, I'm sure even hospital also got affected due to this pricing, right? Any other impact, any other macroeconomic factor impacting their business in these 2 years?
Tax revisions after the presidential election?
Yeah, tax revisions, yes. Okay, tax revisions, tax changes in tax, tax, right? And if you specify any tax applicable to this organization or hospital, sorry,
VAT.
Yeah, VAT. Yes. Yeah, as I can remember, VAT rate reduced, right?
Yes, came down.
Yeah, VAT, yeah, reduced from
15 to 8.5 or something.
yes, right. So 15 to 8. So there is a positive impact, right? And even the income tax rates, they brought it down from 30, from 32%, right? 32% to 20. Yes. So there's change in tax. So other than COVID, impact of Easter Sunday, price control, and change in tax, and any other factor important as you think?
Dollar rate going up?
Exactly. Yes. So that this is also I expected from you all. Exchange rate impact. The impact of exchange rate, right? So to buy a dollar, I think in 2019 we had to pay only 130, right? Yeah, around 130. And it increased to 180. Increased to 180. Right? How they are affected? Are they selling or are they importing?
They import the some machines and all that they import.
Yeah. So if they import machines, yes, there is a direct negative impact. But even most of the pharmaceuticals are imported, right? Not directly by them, but other pharmaceutical companies import and they sell pharmaceuticals to hospitals, right? So then the impact of exchange rate, and if it is negative, definitely pharmaceutical companies pass that to the reduction in margin to the customers as well, right? So there could be a significant negative impact of exchange rate on their performance, right? And these are some any other important things, any other important macroeconomic variables, and interest rates, 2020 interest rate or 1920 interest rates
came down.
Yeah. So 1920 came down, or
It was high and now only it has come down. No?
yeah, I think at that time high, as I can remember. I am not too sure, right?
Yeah, it was high. Yes.
Yeah. So high interest rate. Right. So without going through the financial statements, as a reader, you should be able to, even if they don't disclose, you should be able to understand the macroeconomic variables or the environment changes or the changes in the competition or the changes in technology. So how impacted the business, you need to understand, right? You need to understand. And so these are some of the variables. These are some of the variables that we need to understand before going through financial statements. Sometimes we can see when you go through the review, right? When we go through the chairman's review, CEO's review, and the management discussions, we can see how all these variables impacted their business if they disclose, right? Yes. Again, going back to this summary, right? I am going back to this summary. Revenue 8.5 billion, operating profit 1.2 billion. Last year, 8.5 billion uh, revenue and 8.8 billion profits. So 49% increase in profit, operating profits, right? So all the variables that we mentioned here, the changes in the environment are positive or negative.
Mainly negative, but few positives.
Yes. What are the positive things?
Tax, only the tax thing was the positive.
Yes, the tax thing is positive. Other than that, all others, I think, negative, right? All these changes taken place in the environment are negative for this hospital, except for taxes. Yes. So VAT reduce and also the income tax reduce. So therefore, and for operating profit, is there an impact of tax? For operating profit, is there an impact of tax? Income tax?
No direct, but unless indirect.
Yes, no direct impact of income tax. Why we say? So this is before tax. This is before tax. So therefore, no impact of income tax. But as you said, if there is a positive impact of VAT on hospital operation, so that we can see, right? That we can see, right? So
Priyanka, on tax, you're talking about corporate tax, is it?
yeah, yes, corporate tax.
Okay.
Yes, right. Yes. So in this company, yeah. So now let's see as I told you, normal relationship is positive between revenue and operating profits. If you increase profit, you can expect an increase in, sorry, if you increase revenue, you can expect an increase in profit as well. But in this case, they maintain same revenue, but they increase profits, right? And again, this is challenging when you consider the challenges created by the environment in that year, right? So price control is a challenge. It's negatively impacted. Is a Sunday attack negatively impacted, and most of the hospital closed due to security issues, and the impact of exchange rate is negative, right? So number of negative factors were there during that period, but still they improved profitability, right? Improved profitability. So as a reader of the financial statement, you need to understand relationship between different variables, right? You need to understand the relationship between different variables, right? Normal revenue and operating profits, positive relationship, but in this case, this is not an impossible scenario, but this is a red flag for the readers. If you are a reader, you have to put a question mark, how they achieved this. We don't say this is impossible, but this is possible. But when you consider all these negative factors, and while having a negative environment factors, you achieve increased profits, maintain same profit, the same revenue, right? Yes. And any other comments? from these two variables, revenue and operating profits? Yeah. From these two variables? Okay. And operating profit is 1.2 billion and last year 0.8 billion. And why operating profit before tax is loss? So this is not profit before tax, this is loss before tax, right? So this is the loss before tax. Why this is negative? Why this is negative?
Could be on investment or the high depreciation.
Yeah, could be on investment or high depreciation. Yes, yes. What's the difference between operating profit and profit before tax? Can you remember? I explained this, right? So why I explained this also, at the beginning, to justify this kind of a situation, to understand this kind of a situation, right? So what's the difference between operating profit and profit before tax? What are the items that you eliminate when you calculate operating profits?
Financing costs.
Financing cost is, financing cost is one thing.
And the depreciation and any provisions on those?
Yeah. If you specify,
Impairments.
if you define operating profit and profit before tax, operating profit is the profit from core operations, right? What's their core business? What's
Healthcare.
their principal activity?
Healthcare.
Healthcare. Healthcare. This hospital, the main business or the principal activity is providing healthcare services, right? And what are the non-core activities, the possible non-core activities carried out by this company? Huh? So as you told, one reason to have a difference between operating profit and profit before tax is the financing cost, right? So financing cost or interest cost, right? So the one reason is the finance cost, and other than that, if there are any other investments, so their profit also treated as other operating. This is not part of their core business, other operating. So let's go through the income statement, then we can understand what kind of items are there under after operating profits, right? Let's go through it a little later. And the loss is 166 million, right? So loss is 166 million, and last year loss 388 million, 388 million, and profit after tax. Before tax there is a loss, but after tax there is a profit. How come? Right? So before tax 166 million negative, and after tax is 15.9 million positive, right? Before tax is negative, and so in this case this is obvious, right? Due to taxes, the profit after tax loss, so last year increased from 388 to 587, right? From this 388 million you need to deduct taxes, so then your loss is 587 million. So why here positive number?
There's been a tax reversal.
Yes, yes, exactly, yes, right? The main reason to have a profit in this year is due to tax reversal. What is meant by reversal of tax? For income tax, we provide for, we make a provision, right? And also, we don't know the exact income tax liability at the end of the financial year, right? You do an estimate. You estimate income tax liability for this year at the end of the year, right? And there could be a difference between what you estimated and the actual tax liability, right? Can that happen? Can there be a difference between the what you estimated and the actual?
Can.
Yes, yes.
Why is there such a difference? Why can't we accurately estimate it? Because I mean, the tax laws are quite straightforward.
Revision of the policies.
Yes, yes. Yeah, tax rules are not that quite straightforward. That's the main issue. If the laws are straightforward, so then you can forecast accurately. But most of the tax rates are not that straightforward, right? And also the more the tax act is interpreted by different readers in different ways, right? Different readers in different ways, and also there are vague areas. The act is not clear, and from the act they don't cover all possible scenarios. So after imposing the tax, they see some weaknesses and they change the laws, right? And that's why you need to estimate taxes, right? There could be a difference between what you estimated and the Inland Revenue Department, right? And sometimes Inland Revenue Department challenge your computation, and also you also can challenge Department of Inland Revenue, right? If the Department of Inland Revenue think that your provision is not enough, they can make an additional assessment. So they can do a tax computation on their own and say, so this is your tax liability, not the amount you mentioned in your tax return, right? They can issue an assessment, right? And also the company can appeal or fight with the Department of Inland Revenue, argue with them, right? And that's why you can have, there is a difference between what you estimate and the actual, right? So some years.
Priyanka,
Yeah,
just a quick
yeah.
question. Is that a situation unique to Sri Lanka because our tax laws are vague, or is it an international scenario?
Most of the other countries tax rules are bit clear, right? Bit clear, right? And but in Sri Lanka, and not 100% clear. And when you prepare tax regulations, and most of the other countries, they follow a consultative process. Before implementing a tax law, before introducing a new tax law, they consult with industry or different industries. So what would be the impact if I implement this tax on your business, right? So it's a consultative process. Therefore, you don't need to reverse what you implement, right? So in Sri Lanka, the process is not that, let's say, a consultative process. They also consult chambers and other professional bodies, but not that level. So therefore, in Sri Lankan law, sometimes you miss some areas. There are vague areas, right? Can you remember the payee tax change by the government from
Yes.
1st January?
Yeah.
Right. So initially they say 1st January don't deduct deduct payee, or the law introduced in March, I think, from 1st January, and by that time most of the companies paid their salaries and already deducted their payee, and they rename it as advanced personal income tax. And they say, the Inland Department, they say, so now the companies can't deduct payee unless employee authorize you to deduct it, right? It's a different way, right? So those days, the companies don't get your permission to deduct payee taxes from your salary, right? Now if the company wants to deduct payee tax APIT, they need to get your permission in writing. So can I deduct your payee, right? So they change regulations. And also, and the one example is, you can claim your medical expenses and children's education, or the educational expenses, right? Is it a clear regulation when you say medical expenses? Which medical expenses, right?
No, it's not.
Yes. So that's why we say vague, right? A person can go to a spa and say that, I got a treatment from them and I'm going to claim the bill, right? So can they claim? It's not mentioned. It's not specifically mentioned which kind of treatments are treated as medical expenses, right? Whether Ayurvedic or whether different different varieties are there. So it's vague, right? And when you say educational expenses, again, it's a debatable. It's a debatable. So the one thing is clear. They say educational expenses incurred in Sri Lanka, you can deduct when you calculate your taxes as an individual, right? So if it is educational expenses, which kind of educational expenses? Whether it's the school fees, whether it's tuition classes, and for most of the tuition classes, the money that you spend, you don't get receipts. And if you get if you get a teacher, and if it is an individual tuition, you don't get a receipt from the teacher, right? Can we claim them? So most of the income tax payers, they estimate their income tax liability, by using the way they understand the law and the way they interpret the law. But Department of Inland Revenue interpretation and my interpretation might be different. So that's why all the time there is a difference between the tax estimated by us and the Inland Revenue is different, right? And it's common to everywhere, but I think here in Sri Lanka, there are more complications, right? And so recently, UK, they changed their taxes, right? So after the Brexit, right? So all European Union countries treated as part of UK, and they had the same tax structure. So after Brexit, and as I can remember from first January, I think last year, the first November, whatever, I can't remember the exact date. So from that day onward, and all the European Union countries are treated as independent countries and treated as exports. Therefore, no taxes, no VAT, right? So sales made within UK treated as liable for VAT, and all others are not liable for VAT, as sales to US, right? And most of the countries, even the Australia, most of the countries regulations are a bit straightforward than our tax regulations. Yes, right. Again, coming back to this. So this
just a quick question. Now,
yeah.
based on the current laws in Sri Lanka, is everyone over the age of 18? Is everyone? Is it mandatory for people to submit a tax return at the end of the year, irrespective of whether pay is deducted from your remuneration or not?
No. You don't. That's their long-term plan, right? So once you reach the age of 18, thereafter, so they need to use the identity card number, NIC number, as the tax identification number, and it's a unique number, and your identity card number is your taxpayer's identification number. And so thereafter, with the development of IT, we can capture all the transactions carried out by you, right, from the ID number. All the bank transactions you can capture. All your vehicle transactions you can capture, right? All your land transactions, I think that is not automated in Sri Lanka. Still, I think manual process, but if it is automated, you can capture that as well. All your imports and exports also you can capture. I think already these customs and the Department of Inland is linked, right? So therefore, the long-term objective is that, but at the moment, what you need to do is, if your income is more than 250,000, so then you need to open a tax file, right? So if your monthly income is more than 250,000, right? Even if your pay is deducted, still you need to open a tax file, and you need to file the make self-assessment payments on quarterly basis. Yes. Okay, going back to this, the profit after tax, the 15.9 million. The main reason to have a 15.9 million profit in this year is due to tax reversal. So what you provided last year, you reverse this year, right? So end of the year you provide for taxes, and next year with the communications with the internal department, you finalize and you notice that there is over provision, so you can reverse it in this year, right? Can you guess the value of the tax reversal in this year? Tax reversal? What's the amount?
166 plus 16.
Yes, 166 plus 15.9.
15.9.
Yes. So roughly it's 181.9 million reversal, right? So that's how they achieved this profit, right? So that's how they
In a
achieved
practical scenario, can you have so much of about 180 million?
Yes, right. So when you say taxes, there are two types of taxes: income tax and the deferred tax, right? And I'm going to explain deferred tax also, not now, and I will discuss a little later. So deferred tax, there could be a reversal, a significant reversal, right? If there's a drop in the income tax rate, so there could be a reversal of deferred tax provision, right? Those who understand deferred tax, they know, right? And there can be a reversal of deferred tax also, right? Yeah, we need to go through the income statement and understand what kind of tax they reverse, whether this is income tax or whether this is deferred tax, right? If the breakdown is given, we can see, right? So 181.9 million reversal. It's a significant reversal. And also remember last year was the tax provision last year, difference between 587 and this one, right? You can add these two, 587 minus 388. So they provide for 199 million. The total amount they reversed this year, right? So last year they provided 190 million, and that's almost the same amount they reversed this year, right? So we need to go into detail and understand the reason, right? So this is tax reversal. Okay, can you take a break? Can you take a break?
Okay.
Yes, please.
Okay, 10 minutes, huh?
Okay.
What's the time now? Yeah, 4:33. So 45?
Okay, sir.
Okay, thank you. Are you all there?
Yes, sir.
Yes,
Okay.
sir.
Yeah. So again, yeah, I shared the annual report. Can you see this? Financial highlights. Can you see the financial highlights?
Can see, sir. Can see.
Yes. Okay. And the revenue and operating profit and profit after tax we went through. Then total comprehensive income, expense, and we'll discuss it later. And GP margin given 55.95 and 51%. GP improved, gross profit improved, and operating profit margin last year 9% and this year 14%. And we haven't discussed ratios yet, but you understand this. Last year operating profit margin 9% and improved to 14%, right? We need to understand how they improved their operating margin. And net loss margin 18.18 and last year 6.88, and return on assets 0.09 and last year is negative, and ROE, right? So this is the summary. And return on capital employed, interest cover 3, right? And let's quickly go through the financial position also summary. Total assets 17 billion, right? So I am going to type this also. Total assets, right? Total assets 17.9 billion. So this is the balance sheet. Total assets 17.9 billion. and 17.7 billion, and last year 16.3 billion. 17.7 and last year 16.3. And total liabilities this year 14 billion, 14.2 billion, and this number, and last year 12.8 billion, right? So there's an increase of total liabilities. And shareholders equity, no significant change. Last year 3.4 billion and this year also 4.3 billion. There's a reduction, right? So what are the reasons to have a reduction in shareholders equity? Can you guess why shareholders equity declined from 3,442 to 3,430?
Drawings?
Drawings. Okay.
No, dividends have been paid from retained earnings?
Yeah, dividends have been paid. Yes, dividends. What are other possible reasons to have a
Any
drop?
redemption shares?
Yeah. So redemption of shares. Let's say share buyback. Yes. Share buyback. Any other
Yes,
reason?
sir.
Any other reason? And due to losses also. So losses also we deduct from equity. If there's a loss also we deduct, but this year there's a profit. Therefore, as he said, might be due to dividend payments, or the one more point is there.
Reserve.
Yes, reserves. If you specify changes in
Revaluation.
revaluation, mainly revaluation reserve, right? So you need to if you revalue your property, plant and equipment, and if there is a positive impact, the equity value increases, and if there's a negative impact, it's a reduction, right? And some of the ratios given. What is this net asset per share? Right, before discussing ratios, net asset per share. What is this? Net assets per share.
So that's
Total asset
net.
divided into total share, number of shares.
Total assets divided by total shares.
Right. Yeah.
Is that correct? Net asset per share.
That
Not
should be
total.
net assets divided by total shares in circulation.
Yes, the net assets, not the total assets. We need to take the net assets. How do you calculate net assets? From total assets, we need to deduct
Total liabilities.
total liabilities. Another name for net assets?
Equity.
Equity. Another name for equity?
Shareholders fund.
Shareholders fund, right? Net worth.
Shareholders wealth.
Yes, shareholders wealth. Yes, right. So this is the shareholders wealth per share. Shareholders value per share. Equity value per share. Net asset per share. Net worth per share. Right? And in layman's language, what is this? 2.42. Let's say if you buy a share, of Navaloka Hospital, the asset value that you get is 2.42 per share. Right? Asset value as per accounts, 2.42. We call this book value. Right? So 2.42. And the some of the ratios given, and I'm not going to go through all. And okay. Yes. And yeah, then number of shares in issue, 1.4 billion, and earnings per share given, and market capitalization is also given, right? Last year market capitalization 2 billion, and this year 4 billion. What's the reason? Why last year market capitalization 2 billion and this year market capitalization 4 billion? Is there a change in number of shares? Has there been a change? No.
No.
Number of shares last year also 1.4 billion and this year also 1.4 billion. What made the difference?
Share price has
Share
gone up.
price has, yes, share price increase, like double, right? So share price double, that's why market capitalization increase. So market capitalization, how you calculate number of shares into market price per share, right? So no change in number of shares. So then this change is made due to increase in share price.
Just a quick question. When you consider the market, sorry, the share price, is it at a particular date, as at 31st March?
Yes,
2019.
yes, as at the end of the year. So if this capitalization, market capitalization as at 31st March 2020. To calculate market capitalization as at 31st March 2020, you need to take the share price on the same date.
Okay, thanks.
Right.
So what
So,
is market capitalization?
Yeah, the market capitalization is the market value of equity. Right. So in other words, share price, the number of share price into number of shares in issue. Right. So in this case, the number of shares 1.4 billion is here and market price not disclosed here, right? And if you divide this market capitalization by number of shares, you can get the share price, right? So if you multiply the 1,409 by the market share price, you get 4 billion, right? Is it clear? This is the market value of equity.
Right, sir. Thank you.
Share price or share value or value of the business. Right. Now let's go through the auditor's report, right? And yeah, auditor's report, this is page 4. Right.
Just a quick question, Priyanth, on what you said earlier.
Yeah.
So now the market capitalization is in millions of rupees.
Okay.
But the number of shares, that should be absolute figure. No? That can't be in millions. No? At the moment, it's
no
1.4 billion shares.
It's number of shares. It's number of shares. Yeah. Thanks. Right. So financial position in 129. Sorry, the auditor's report is 123. In PDF, I think 125. Let's see. Right. So this is the auditor's report. Was the heading there? Was the heading given in the report? Yeah. Independent auditor's report. Can you remember? Right. Auditor should be independent. Otherwise, you can't do an audit. Right. External auditor should be independent. Right. So how do you maintain independence? How do you maintain independence? And when you lose independence, let's say the KPMG, they say we are independent auditors, right? When they lose independence, on due to what reasons you lose the independence as the auditor?
When the client influences.
Client influences, yes.
When there is a lack of integrity?
Lack of integrity.
If accounts have not been prepared according to accounting standard.
No. My question is, normally auditor should be independent, right? So sometimes some people, some auditors, you can't appoint as independent auditors. So they don't have independence. So how do you identify this? What are the reasons to have dependence?
There's a conflict of interest. If
exactly.
let's say
Yes. If there's a conflict of interest, yes.
There's a relationship with the directors.
If there's a relationship with the directors, right? And let's say KPMG partner is a director of Navaloka Hospital. Then can they work as the independent auditor?
No, they can't.
If the partner, one of the partner of KPMG is a director of Navaloka Hospital, then can KPMG treat as an independent auditor?
No.
No, no. And if the major shareholders son is a partner of KPMG, major shareholder son is a partner of KPMG, can they treat it as an independent?
No.
No, no, right? And the auditor should be independent. You can't appoint a relative, you can't appoint a director, you can't appoint a spouse of a director, or the major shareholders director, or CEO's spouse or children.
Priyanka, how do you define major shareholder? Is there a particular shareholding percentage?
Yeah. So the one having the biggest shareholding percentage.
So the largest shareholder.
Yeah. Even sometimes, let's say if you have, let's say, 15%, you can appoint a director. So then you also become a related party. If you have 10 shares if you work for, let's say, KPMG, let's say KPMG partner is having 10 shares in, or their spouse is having 10 shares in this company, then it's not a material, and you can treat them as independent, right? And if they have, let's say, a significant percentage, a material amount, so then it's you lose the independence.
So that is the percentage is up for interpretation, is it?
Yes.
Because
yes.
now, right.
Yeah.
Okay.
Yes.
Okay.
Right. Okay. So the heading says independent auditors report, right? So it's independent auditors report, and issued to whom? Issued to whom?
The board.
Shareholders.
Shareholders.
Yeah. So here they mention to the shareholders of Navaloka Hospital PLC, right? So they say to the shareholder, they issue this report not to the banks, not to the Inland Revenue Department, but to the shareholders of Navaloka Hospital PLC, right? And what's their opinion? What's their opinion? Can you read this? Right? Is it too small? Opinion? Sorry. Right? So they say we have audited the financial statements of Navaloka Hospital PLC. What they audited? What they audited?
Financial statements.
Financial statement. Remember, auditor audit financial statements, not the company. Right? Auditor audit financial statement, not the company. Right? So we have audited the financial statements of Navaloka Hospital PLC, the company, and the consolidated financial statement of the company and its subsidiaries. Is called group, which comprise the statement of financial position as at 31st March 2020 and the statement of profit or loss and other comprehensive income, changes in equity, cash flows for the year then ended, and notes to the financial statements, including summary of significant accounting policies. So the composition of the parts of components of financial statements, right? And let's read the opinion, right? So what they say?
True and fair view.
Yeah, sorry. Okay.
Says that the statements give a true and fair view of the company.
Yeah, let's see.
Financial position.
Yes. Right. I don't know, somebody else is controlling my cursor. All right. Minimize this. Okay. opinion, right? Can you see here? We have audited the financial statements of Navaloka Hospital PLC and the consolidated financial statements of the company subsidiaries, right? They say. And the last para, the next para, they say, in our opinion, the accompanying financial statements of the company and the group give a true and fair view of the financial position of the company and the group as at 31st March 2020 and their financial performance, cash flows for the year then ended in accordance with Sri Lanka accounting standards. They say a group give a true and fair view of the financial position, right? Balance sheet. When you say financial position, balance sheet, and then and the group as of 31st March and their financial performance, right? Income statement, right? Profitability. So they say financial position is accurate and financial performance is accurate and the cash flows for the year then ended, right? So auditor's opinion, they specifically mention the financial position is, you can see the true and fair view, and from the income statement you can see the true and fair view of performance, and from the cash flow statement you can see the true and fair cash flow cash flows of the company, right? And so basis for opinion I'm not going to go through. And so what is this emphasis of matter? Restatement of comparative balances. Right. So they say they restated the last year balances, comparative financial statements. So after completing last year audit, they change comparative numbers in this year financial statements. Right. This year financial statements. So this is they emphasize in their auditor's report. Okay. And so this is a new part, new addition to the auditor's report. This part, key audit matters, right? So we start disclosing this part very recently. Previous audit reports, you can't see key audit matters, right? But here, now you can see in the auditor's report, all the auditor's report, key audit matters. If there are any key audit matters that should be disclosed to the shareholders, so you include in this, right? So let's go through this quickly. What are the key audit matters in this report? The key audit matters are those matters that in our professional judgment were of most significance in our audit of the company financial statements and the consolidated financial statement of the year. These matters were addressed in the context of our audit of the company financial statements and the consolidated financial statement as a whole, and in forming our opinion thereon, and we don't provide a separate opinion on these matters. So they say they identify, auditors identify these are as key audit matters, right? First one is revenue recognition, right? So they disclose the company and the group has recognized revenue of 3.678 million and respectively for the year ended 31st March 2020, right? Revenue is a key performance indicator used to evaluate the performance of the group and the company. Given the significance of the total value, the number of transactions, judgment involved in the timing of recognition and dependent on IT system over the recognition of revenue, the recognition of revenue was considered as key area of focus. So when they do the audit, they look at revenue recognition, how you recognize revenue is as a material event or important event, right? And they say how they check this also. Here, our audit procedures include obtaining an understanding of the testing of key controls in respect to group revenue recognition, right? When you with regard to revenue, there are internal controls. They assess, they identify or understand the internal controls, and also they say testing invoices on sample basis. So they select a sample of invoices, sales invoices, and check whether check the accuracy of those transactions, right? And assessing the appropriateness of the recognition of revenue and related discounts, including carrying out substantive testing in respect of revenue cutoff procedure as at the end of the year, right? So the cutoff procedure meaning is end of the year, right? Some companies, if you want, you can defer some of your sales to next year, or you can take next year sales as this year sales. To overcome that issue, the auditors need to do a cutoff test, right? So they select a sample of invoices from this year, 2020 financial year end, let's say last 10 transactions in March. And also first 10 transactions of next year, 2021, or the first April transactions, they select and go through all the documents and see whether these transactions are recorded in the relevant period. So we call it cutoff test, right? And the timing of recording of transactions, right? We need to record in the right period to check that they carry out this cutoff test. And also they assess the adequacy of financial statement disclosures, right? And this is their report. I'm not going to go through all the details.
Priyanka, just a quick question. So there has been no change in revenue recognition in this company, has there been?
Yes, the policy, they didn't change.
Okay.
Right. And also they say the second important material item is measurement of inventories, and they identify the risk and how they respond. Auditors, what kind of actions they took to mitigate the risk, right? To ensure accuracy of inventories, they disclose here, right? I'm not going to go through all these. And then recoverability of deferred tax assets on accumulated losses, right? And deferred tax, I'm going to take one example, not today, right? So after discussing this annual report, we are going to take one example from deferred tax, right? So they are talking about deferred tax. And also adoption of transition to SLFRS 16 leases, right? So there was a change in accounting standards, and therefore this company also, to comply with new accounting standard, they change. So, and the impact of this also discussed here by the auditors. Not like those days, the auditor's report is bit lengthy, right? Now you can see a lengthy report compared to those days. Auditor's report is only one page, right? Now we need to disclose these all material transactions, right? How you recognize revenue, right? And other information also, how they check non-financial information. And so this is the auditor's report. And they specifically mention auditor's responsibility, right? Auditor's responsibility for the audit of the financial statements. Right.
Just a quick question now. They have highlighted these 4 areas.
Okay.
They've highlighted it not to say that there's an issue. Is there a
no issue? Yeah.
So is it now a statutory requirement for the auditors to highlight these specific 4 areas?
Yes. Not only these specific areas, right? So in this business, they identified these, using their judgments as these are the risk areas, high risk areas, right? So in the case of a bank, you might have different areas, not the same areas, right? So in a bank, inventories are not that material, right? So the value of inventories is less compared to manufacturing. So there's a power cut in our area. That's why we got disconnected. Can you hear me?
Yes.
Yes,
Okay.
yes.
Hari, screen share. Hari, screen sharing. Hello, Karan. Okay, thanks. Okay, can you see the annual report?
Yes.
Can see,
Yeah.
sir, can.
Yeah, sorry, there was a power cut and now, yeah. So this is a new addition to the auditor's report, which you can't see in previous auditor's report. And in a way, this is good, and auditor also should be responsible. And they specifically mention these are the risk areas and what kind of actions they have taken. So therefore, not like those days, even a non-accountant can read and understand this and take action against the auditors. Right? They say the activities that they carry out to ensure accuracy of sales. So those days, so you don't disclose these kind of information. Now you need to take there is a responsibility for the auditors, and also readers also can take action against them, right?
So if in case of a qualified accounts, like then the elaboration would be more, or like, you know, are they supposed to specifically mention?
Yeah, if there's a qualification, can you remember as I explained you, there are different auditors report, right? So this is a clean report, and sometimes they qualify the auditor's report, or sometimes they disclaim. So disclaim is you do the audit, but the auditor can say we can't express an opinion on the financial statements, right? So if the auditor can't express an opinion on the financial statements due to scope limitation, they disclaim the report. And if there's a disagreement between management and the auditor, right? I will repeat. If there's a disagreement between management and the auditor, they qualify it. Let's say provision for bad debts is not sufficient as per the auditor's opinion, right? So then they can qualify. So they say, based on our judgment, the bad debt provision should be this, but the management, they say the provision is this. Then they disclose the profit is overstated by this amount and the provision is understated by this amount. They specifically mentioned in the auditor's report. So if there's a qualification that you can see in the auditor's opinion. So if there's a qualification, they need to mention the qualification and the impact of qualification on profitability, the impact of qualification on the financial position, the auditor need to disclose. So therefore, if there's a qualification, we can see, but here there's no qualification, right? So one thing they emphasize, that's the last year numbers, comparative numbers, they restated, right? So that's the emphasis of matter. It's not a qualification, right? All these material transactions, these are not qualifications, right? This is a new statutory requirement. So as the auditor, they need to identify the high risk areas of this business. So according to them, so these are some of the high risk areas, right? So in their report, 4 areas they identified. So all those 4 areas Can you hear me?
Okay, sir.
Yeah, sorry for the interruption. Yeah, now let's go through chairman's message, right? Page 28, right? Page 28. Let's say 30 PDF, right? Chairman's message. Right. Can you see the chairman's message? Can you see
Can see,
the?
sir. Can.
Okay, thank you. And this is a chairman's message, and all the annual reports you can see chairman's message and the CEO's message. And here they say 2019-20 was a mixed year for Navaloka Hospital PLC. Right. So what is meant by a mixed year?
There are positive and negative.
Yes, there are positive and negative, and if negatives are more, most of the time we use mixed year, right? And so they say they got an award, and not going to go through. And the group recorded, so I'm going through this part. The group recorded a revenue of 8.5 billion and profit after tax of 15.9 million compared to net loss of 587 million the previous year. Commendable performance amid turbulent times, and assets grew 9% to 17.7 million, right? So some financial data disclosed by the chairman, and then he's talking about macroeconomic and health sector, right? So according to him, according to this report, they say Sri Lankan economy, so there is a negative growth, 2.3% in 2019, largely due to the impact of Easter Sunday attack, right? So overall Sri Lankan economic growth is a negative growth, 2.3% in 2019, right? So one of the factors that we need to understand, so there is an overall impact to all the businesses if the economic growth is negative, right? If the country's economic growth is 2.3% negative, right, it's a reduction of overall output of the country, right? So overall output, how you get the individual contribution, the sum of all the individual contribution. So therefore, if the overall economy is negative, and there is an impact to everyone, right? So they say, so this is due to this, right? Impact from Easter Sunday attack. Economic activities has since been severely impacted following the COVID-19 pandemic outbreak from March 2020, right? So what they say, and they say they are talking about the COVID-19 pandemic also, right? And so then they're talking about the government expenditure on health increased to 12%, and yes, right. And they say the government sector is dominated in the health sector. Right, read this paragraph, this part. According to World Bank report, 50% of the medical treatment and 90% of hospitalization and 99% of preventive care needs of the country are provided by the state system, right? So the private sector contribution in the health sector is negligible when you consider all these ratios, right? The hospitalization 95% government hospital, and preventive care 99% public sector, right? Then he is talking about the industry trend, right? So what kind of trends are there in the industry? And right? So the main reason for them to expect an increase in demand for private health is the aging population of the country, right? So aging population and is increasing, therefore they say there is a potential. And yes. Sorry. Right, performance. Please read this paragraph, this part. Growth was limited due to falling volumes on account of macroeconomic challenges and stiff competition, right? So they say two reasons. One is due to macroeconomic challenges and the second is due to competition. And the next important point is liquidity was managed by restricting expenditure of capital nature, right? How they manage liquidity during this year? Right? How they manage the liquidity during this year?
Restricting the capital expenditure.
Capital expenditure.
Yes, yes, right. And also, so this is very important to understand, right? Whatever the capital expenditure project that you started or about to start, we need to differ sometimes based on the overall liquidity position of the country or overall liquidity position of the organization. So this is a very good example, right? Why they deferred their capital expenditure? To overcome or to manage liquidity issue, right? So why they sorry. Right. Liquidity was managed by restricting the expenditure of capital nature, right? And driving cost reduction measures across the organization, right? And why they wanted to control capital expenditure to manage liquidity issue. Why there is a liquidity issue in this year? Mainly due to COVID and not mainly due to COVID, but due to Easter Sunday attack, right? So expected revenue, they couldn't materialize, or there is no increase in revenue as they expected, right? And therefore, some of the capital expenditure they deferred. So as I told you, timing of capital expenditure is important. And even if you have already committed comments, and if you want to survive during crisis period, especially like COVID period, so you need to defer some of your capital expenditure, right? So if you can defer it for 1 year, 2 year, so better defer it, right? If you are experiencing liquidity issues or if you are expecting possible liquidity issues, right? And also in addition to restricting expenditure, capital expenditure, and they carried out some cost reduction measures across the organization. So that's how they manage profits, according to the chairman. And also next paragraph, they say option for Central Bank of Sri Lanka debt moratorium offered to business affected by pandemic and subsequent restructure of the term debt to longer tenor facilities supported to improve liquidity to larger extent. But they say Central Bank requested all the banks to offer moratorium to businesses. So they didn't charge, they didn't ask customers to pay their loan installment and defer even the interest. And so they utilized that option also. And in addition to that, the most of the long-term facilities they restructured, right? Why you need to restructure? Why you need to restructure long-term facilities?
To reduce the finance cost.
Yeah. So how do you reduce the finance cost, or why you need to restructure facilities? Yeah, one thing is not to reduce the finance cost. Sometimes you can reduce the finance cost, but the main reason is not that. Why you need to restructure?
Keeping liquidity, in healthy situation.
Yes, right. So due to this pandemic situation and Easter Sunday attack, expected cash flows are not coming to the organization. So therefore, at the time of obtaining bank loan, you expected all these cash flows. Now you can't expect the same cash flows. Therefore, now there is a liquidity shortage. You can't service all the loans as you expected. So in that kind of a situation, you need to negotiate with banks and extend your loan period, right? If you obtain a loan for 4 years, you can renegotiate with bank and you can tell the bank that we are experiencing a cash flow difficulty and this is a short-term difficulty. So during this period, we need to manage our liquidity. Please help us. So one way that they can help is they can restructure. They can provide extended periods. If it is 4 years, you can take 8-year loan, right? So then your installment payment will come down by that amount, right? When you extend the period, the loan you obtain for 4 years, you extend it to 8 years. So you can reduce the loan installment significantly. So you can match. And during this pandemic time, you need to talk to the banks and tell that this is our cash flow. And we need to pay salaries and fixed costs. And this cash flow is not sufficient. And also we need to carry out the business operations. We need to run the business. For that, we need liquidity. So if we use all the collections to settle existing borrowings, we can't run the business. Therefore, please help. So that's what they did during this period. So what they have done is this, right? The restructuring of existing facilities. And most of the businesses affected by COVID, I think you need this. And in Sri Lanka, I think other than moratorium, you don't get many benefits from the government. But in other countries, in Australia, and the companies don't need to pay salaries of the employees. And so it's a kind of a layoff. You temporarily remove employees from your company, and the government pay their salaries, and also rent. And there are criteria imposed by the Australian government. They say if your business revenue drop by a percentage, as I can remember, 30% or more, right? Then whatever the possible rent increases during that period, they can't, the landlords or they can't increase. It's a regulation, right? And so in Sri Lanka, the only benefit that as a business that you can get is you can get the moratorium, plus you can negotiate with the bank and get a restructure your facilities, right? And yes, so looking ahead, read this part, right? You can understand next year, right? Forecast for 2020 presents several challenges with the global economy expected to contract to 3%, right? So even next year, 2021, they are expecting a challenging period, right? The main reason is even the global economy due to COVID pandemic expected to contract, right? So 3%. And also Sri Lankan economy to contract by 1.7% in both cases. The place and the magnitude of the economic recovery is dependent on the success of containing the COVID-19 pandemic. As we face the uncertainty and challenges it presents, we will seek to adapt to create shared value for our stakeholders by continuing to focus on our purpose of delivering advanced and sustainable patient-centric healthcare responsibility, right? So this is kind of a vague statement, not specifically mentioned about their future strategies and how they are going to face challenges, right? But if you go through some of the annual reports, even in Sri Lanka, right? So you can see, very good annual report in the banking sector, right? Commercial bank, HNB, Sampath Bank, most of the annual reports you can see what they are planning to do next year, about their strategies, and even insurance companies, right? So go through even unlisted company Selinco Life, you can go through their financial statements. So you can see a lot of information, what kind of strategies they are planning to adopt. And all these things are disclosed there. And in this report, this is kind of a vague statement, not without specifying anything. They say they expect a challenging period, and how to overcome this is not clearly mentioned, right? Okay. So then the managing director's review also there, right? In addition to the chairman's review, deputy chairman's review, right? And let's see what he says. Right? I want you to read this paragraph. Right? The Navaloka Hospital Group recorded revenue of 8.5 billion, while profit after tax grew substantially to profit of 15.9 million compared to a loss of 587 million the previous year. The performance was commendable in extremely challenging year, which witnessed the ISIS terror attack in April 2019 and unprecedented lockdown due to the global COVID-19 pandemic at the end of the year. Right? And they say despite the setback which had an adverse impact on the healthcare industry, we continue to enhance our value proposition to patients with our investment in infrastructure and people and processes. So they say performance, right? And they say there's a substantial increase in GP, gross profits, from 56 to 51. This performance was achieved amidst heightened security concerns and social distancing norms, which impacted the hospital. Right? Is that correct? Is that correct? So how we justified? Huh?
Yes, it's correct.
Correct, sir.
Yeah. The with regard to the security concern is not an issue, but with regard to the COVID, I think only 15 days impact, right?
Yeah.
Yes. So how they justify is this is due to COVID. You can't justify this is only for 15 days, right? There can't be a significant impact of COVID on the hospital business, right? Margins were reduced further by increase in cost of imports, right? So now you can understand the things that we discussed. The margins were reduced further by the increase in cost of imports on account of the steep depreciation of rupee by financial year end. So they say exchange rate, due to exchange rate, margins reduced, right? But what they say in the first paragraph, here, they improved margin, right? They improved margins from 51 to 56, but here they say, so there is a negative impact from the exchange rate. The group exceptional improvement in performance is largely related to cost saving measures that were aggressively driven across the organization. How they achieved this profit, as we discussed, right? And revenue they maintain, but they improved profit by 40%, the mainly due to cost saving activities carried out by the company, right? And also they mention what kind of cost savings they carried out. Cost management include renegotiation of price with suppliers and responsible consumption of material and resources. This part, right? Responsible consumption of materials and resources to reduce waste, and upgrading of machinery to improve energy efficiency, and effective staff development. And a cost management team was appointed and tasked with the responsibility of reviewing promptly implemented. Okay, no problem. Okay, right. So they renegotiated the prices with suppliers, and responsible consumption and cost management team appointed. So because of these things, so they control cost during this year, right? And also, when I go through this report, a similar justification, right? Sorry. We are discussing Haley's MGT annual report 2010, and if time permits, the screen sharing may disable, no? Screen sharing disable, no? Hari, Bang, may බලන්න ako. I can't share screen. Okay, now right, sorry. And right, read this paragraph. The reduction in volumes constrain group cash flows, which we exacerbated by high interest costs and scheduled repayment on large scale borrowings, which were utilized to fund capital expenditure. All right. So they use bank borrowings to finance their capital expenditure, and we engage in cost reduction and efficiency improvement programs to manage our liquidity. Right. So the deputy chairman also says they carried out some cost saving initiatives to manage liquidity issue. And we avail the debt moratorium offered by the Central Bank of Sri Lanka and restructure the debt to a longer repayment plans subsequent to the balance sheet date, and lower market interest rate have eased liquidity pressure further. So the interest rate reduction is there in the Sri Lankan market, therefore is a benefit for them. And we believe that the reduction in footfall is a short-term challenge given the essential need for healthcare, right? So this industry and is an essential service. Therefore, they say even if there's the contraction in the overall economy, so they can manage their business. Right, so they expect to increase their business volumes after these COVID restrictions. Right, read this paragraph. This is also very important. Right, we are cognizant of our term debt was raised primarily to fund the capital expenditure of the group's rupees 6.8 billion mega multi-story car park. Right, so they constructed a building. For that they borrowed 6.8 billion, and that's a significant amount when we consider the size of their company. Right, 6.8 billion. Their balance sheet, as I can remember, 17 billion, and it's a significant amount. And 100,000 floor area. Right, I'm not going to go through all these things. Okay, so now let's go through the income statement. Right, let's go through the income statement. Page number. Profit total of 130, page number 130. Right, can you see the income statement? Can you see the income statement?
Yes, sir.
Yes. Right, so the heading they use statement of profit or loss and other comprehensive income. Right, the narration they use is statement of profit or loss and other comprehensive income. Right, there are two columns, group. So this is the group. When you refer group, Navaloka Hospital PLC plus 4 subsidiary companies, and the company means the Navaloka Hospital PLC. Right, so the company column is for Navaloka Hospital PLC, and this is for the group. Right, and revenue, group revenue 8.5 billion, and last year the 8.5 billion which you have seen in financial highlights. Company revenue 3.7 billion or 3.6 billion, and last year 3.4 billion. Right, so there is an increase in the company's revenue, but there is a they maintain the same revenue in the group. Right, I hope there is a reduction in revenue of the group companies. Right, so there's a roughly 200 million increase in revenue of company, but the increase here is negligible. Right, and gross profit last year 4.3 billion group, and this year 4.7 billion, 7 billion. And the company gross profit significantly improved from 1.6 billion to 2.1 billion. Right, so there's a significant increase. Yes, and let's see the staff cost. Right, what has happened there? Company and the group staff cost
Minus video.
Huge.
Yeah, staff cost.
It's increased.
Yeah, so in the group
It has
there's an
increased.
increase from 1.7 billion to 1.762, but company
It's reduced.
yeah, so last year 704 million, now it's 560 million. Right, can you reduce salaries? Can you reduce salaries?
You can't, but maybe the other perks.
Right? So from 700 million to 560 million. Normally every year we increase salaries, but in this case the situation is different.
Maybe retrenchment?
Retrenchment, yes. Retrenchment, yes.
Cut down on other allowances.
Cut down on other allowances, yes. Right. So most of the companies, due to COVID and Easter Sunday attack, right, so reduce their salaries, right? And sometimes in Sri Lanka, if you take consider Sri Lankan labor law, it's bit difficult to reduce salaries. But I think in this situation, even the labor department and other regulators, they allowed this to happen. Not officially, unofficially, I think allowed this to happen. And if you pay a even fixed allowance, you can't deduct, you can't reduce it, right? But this is an exceptional situation. But in other countries, you can do it, right? In other countries, you can do it. But in here in Sri Lanka, labor laws are stringent, and so it's good for the employees, but not that good for the employers. And therefore, it's difficult. But the situation created by COVID and Easter Sunday attack, and so no other option. If you want to run the business, even most of the big garment factories and other manufacturing organizations, leisure sector companies, hotels, all they reduce their salaries to survive during difficult period. So otherwise you can't survive. So I think this company also reduced their salaries. I heard the Thursday class somebody told that 200 employees laid off from the company, and also, as you said, the reduction of allowances and traveling allowances, vehicle allowances, and so you can remove, or they would have removed during this period. So that's why there is a reduction of 200 million, or from 704 million to 560 million, right? It's a challenging task, but somehow or other they achieved this in the company. But when you see the group, they could do the same cost saving there, staff cost, right? Though there is a 200 roughly significant reduction in cost of the company, group increased from 707 million to 1.7 billion, 762 billion, right? So all other group subsidiary companies, they didn't control their salaries, as done in the parent company, right? And
So the staff cost also must be the channeling fees also in that, or without that? What you pay for the specialist?
and no, I don't think that is there, right? I think it's they are in the cost of services, right? Yeah, it's a good question. So see the income statement of this company, the revenue is there, then cost of services instead of cost of sales. So this is a service providing company, service organization, therefore you can't see cost of sales, right? So you need to deduct cost of services. So these are the direct costs. So as you said, the doctor fees, right? It's a direct cost. It's a direct cost, and it's not part of administrative cost. It's a direct cost. Doctor's salary, even nurses' salaries, right? And therefore, I think it should be there under cost of services, not under staff cost, right? And also then administrative expenses. Last year 727 here, 727 million, and this year 784 million. There's an increase. But again, the group, this is different. The group, they couldn't manage their staff cost, but they manage their administrative expenses in group companies, right? All the subsidiary companies, they manage administrative cost. The parent company control their salary cost, but the subsidiary companies control their administrative overhead, right? So that's how both the subsidiaries and parent company control their cost during this period. And what is this other income? Can you guess this other income? Other income, what is this?
Interest income or something like that? Or?
Interest income, right? So let's go through the notes tomorrow, next week, right? I guess this is, sometimes interest income and sometimes rent income. If you have investment properties, you can rent and earn an income, or sometimes dividend income from their subsidiary companies.
So it says dividend income.
Sorry?
It says dividend income.
It's dividend income. Yes, yes. If you go to the notes, you can see the details. So I hope this is, as you said, the dividend income. And then other operating expenses also there, 36 million and 76 million. And so then what's the next item? Impairment of financial assets, right? Impairment of financial assets. And what is this?
Revaluation.
Impairment of financial assets. Can somebody tell me the examples of financial assets? Examples for financial
Treasury
assets?
bonds.
Treasury bonds. Treasury bonds, yes. What are the other assets? Financial assets.
Shares that they might be holding in other companies.
Yes, yes. Right. Investments, treasury bonds, right? Even receivables. Even receivables are treated as financial assets, right?
Commercial paper.
Yeah, commercial paper, investment in commercial papers. All those things are treated as investments or the financial assets. You need to impair, right? If you buy a treasury bond and if you check the market price today, and if the market price is lower than the book value, then you need to impair. So that provision is similar to bad debt provision. And this, so we need to see the details, right? So 37 million they provided for impairment, and the group 51 million provided for impairment, right? And profit from operations, right, increased from 422 million to 772 million. A significant increase in profit from operations of the company, right? What's the percentage increase? Profit from operations? Percentage increase? Roughly how much? What's the percentage? So this year,
82%.
yeah, 82%, right? 82% increase. And revenue increase, right? Operating profit increase, 82%. Revenue increase, company
49%.
no, less than that, right? So 3.5 billion to 3.6 billion, I think less than 5%, right? So revenue, so these are some of the things that you need to dig into detail, right? When you review annual report, when you refer annual report, right? The company number, the revenue increase is only less than 5%, but your operating profit increase 82%, right? It's a significant increase. And also this is not a normal relationship, right? So in normal scenarios, to increase profit, you need to increase your revenue, sales or income, right? So in this case, the profit increase is much higher than the revenue increase. So therefore, we need to understand how they improve profits, whether they control their direct cost, whether they control their salaries, whether they control their other overheads, right? Is it practical to reduce, right? why I tell this is, if you go through Haley's MGT annual report 2010, that annual report was similar to this, and their managing director issued a press release saying that how they may increase profit while maintaining the same revenue. Or there was a decline in revenue, but they maintain same profits. The Haley's MGT in 2010, right? So there was a decline in revenue, as I can remember, 15%, but they maintain same profits. And how they justified their performance the same way. They say energy efficient production technique, lean management, and then they use change the product mix and focus on high margin products, and all those things he mentioned and justified their performance. But after 1 year's time, and when you analyze financial statement, you can see there was a manipulation, and it's a significant manipulation, and not the justification given by the managing director at that time was not accurate, right? So therefore, I don't say that this is not accurate. This is not accurate, but when you read financial statement, you have to be mindful of these kind of abnormal relationships, right? You need to understand these kind of abnormal relationship. Even let's say if you audit the financial statement of this company, you need to be mindful of these kind of abnormal relationships. And so these are the red flags. These are the areas where you need to dig into detail. Let's say if Navaloka Hospital individual company comes and asks for a facility from you, providing these financial statements. So they say we earn a profit of 99 million, and therefore we are profitable. Can you give us a facility, right? When you see the financial statements, you need to understand how they achieved the profit, how they control salaries. So staff cost 200 million reduction. So how they made it possible? Whether there were any layoffs, whether the allowances they deduct, right? You can get more detail if you specifically question these areas from the management, right? And therefore, when you analyze financial statement, we need to go through all the notes, right? Without going through the notes, it's very difficult to understand, right? And also, the next item is a finance income of 7.8 million, and the finance cost, there's an increase 762 million, and the company. So what is this net finance cost? This item, this one, 755 million. So their finance income is 7.8 billion and finance cost is 762 million. This is net of the finance income. So net finance cost is 755 million, and last year is 659 million, right? So therefore, the company turn around the business, and the last year loss making and 251 million loss, and this year 99 million profit. So let's go through all the notes in detail and see how they achieved these results, right? Any questions or any clarification you need? Right.
Last time what you did the Excel working, you said that you will share it with us.
Sorry, I'm sorry, I couldn't share it. I will ask Nipurika to share it with your. Sorry, I forgot it. Yeah, and you need to read the annual report independently. So with the time constraint, we can't read all, right? And if you want to read all these 200 pages and explain, it takes 3-4 sessions. We need 3-4 sessions, but we don't have time. Therefore, please read, right? So next week we'll quickly go through the notes and try to understand, and also read the strategy part. So in the highlights, they mentioned that they added strategy information in the annual report. So this year the new addition is they are explaining strategies, how they change and what kind of strategies they adopt and all. So therefore, please go through and understand. Now, not like those days. Those days we disclose only the financial information, accounts, but in addition to accounts. So even if you go through, even if you go through this report, I think in the content page, page number 4, page number 4 and see the financial statement part. Financial reports, right? So financial report 122 to 134, right? I think notes are there, but I think more than half of the annual report is non-finance, right? You don't need to know accounting to understand non-finance. Therefore, please go through. Those are useful and you can learn a lot, right? And if no questions, we can wind up. Now it's 6:05, right? Okay, then thank you.
Thank you.
Thank you, sir.
Thank you, sir.
Today, stupid interruptions. Yeah.
Thank you, sir.